Real estate versus the stock market, where rich people invest their money. When investing in real estate, you put money into a piece of land or property, whereas investing in stocks is a different experience. Buying a stock means purchasing a claim to a piece of the corporation. Every investment comes with its own set of dangers. Each month, you experience maintenance, capital, or maybe development costs when you invest in real estate, whereas physical assets are less likely to lose their value. It is your personal decision whether to invest in stocks or real estate. It depends on your ambitions, financial condition, risk tolerance, and investment style. Stay tuned with us till the end of the video to learn the comparison between stock and real estate investment. For many years, we've heard the argument as to which is the better investment, stocks or real estate. Both come with their advantages and disadvantages, and many features of each make them unique investments in their own way. Making money with any of them requires that you understand the positives and negatives of both. There are many basic differences when it comes to investing in stocks versus real estate, but how well you are aware of them depends a lot on timing. Timing is an aspect that is impossible to predict when making investment choices. A thorough understanding of each type of investment is the key to selecting the best strategy to help your money grow and create financial stability. Real estate. Many people take the home flipping route, finding distressed properties, renovating them, and selling them at a profit above market value. Others are looking for properties that can be rented out to generate a steady income. In general, you can put down up to 20% of the purchase price and finance the remainder with a mortgage. Advantages of investing in real estate. Investing in real estate offers many positive aspects, such as tax deductions, depreciation, and finally, you can sell the property without paying capital gains taxes as long as you invest the money into a similar real estate type. Disadvantages to investing in real estate? Like all investments, real estate also offers its drawbacks. Most importantly, the investment is leveraged. You cannot usually sell a property right away when you invest in it. Sometimes you may have to hold the property for many years to know its true profit potential. The closing cost can also add up to thousands of dollars and include fees, commissions, and taxes. Stocks. Buying a stock means receiving ownership in a company or corporation. You will get your share of the profit in good times. During a difficult economic crisis, you may see declining funds as the earnings of the company fall. A fully planned, long-term approach and being balanced in all areas can help build your net worth at a greater rate as compared to real estate. The advantages of stocks. Stocks are very quick and easy to sell, quickly convertible into cash. Their flexibility even ensures reallocation into a retirement account tax-free until you start cash withdrawal. Many stocks have the potential to do considerably better than real estate in 1 year. Some companies are averaging 20 or even 50% growth in a single year due to the volatile nature of some stocks. Disadvantages of stocks. Stocks can be very elusive, especially when the economy or the company is in crisis. Your decisions within the market can often be baseless, since stocks are often emotional investments. Lastly, bankruptcy is always present in stock investors' mind, as it should be, as your investment will be dissolved on this occasion. Real estate versus stock investment. Finally, it's usually hard to get diversified when investing in real estate. However, achieving diversification is possible in real estate in a case when you do not concentrate on the same community and have a variety of several types of property. Real estate investment trusts, or REITs, are another way to diversify your real estate holdings. As a shareholder, you can purchase a trust that is invested in a large portfolio of real estate to provide you with a dividend. However, stocks generally offer more diversification because you can have many different industries and areas across the whole economy. The stock investment allows you to use margin as leverage to increase the total number of shares you own. The downside is that if the stock position falls, you could have a margin call. Here, the capital on the borrowed amount has fallen below a certain level and money needs to be added to your account to increase this amount again. If you don't, the brokerage firm can sell the stock to get the loan back. Time and effort. Investing in real estate versus stocks. Real estate requires a lot of hands-on work as compared to stocks, from dealing with the midnight phone calls, water leaks in a toilet, gas leaks, and the chance of getting sued for a bad plank on the porch or more. Managing your investment will still require intermittent meetings and oversight, even after hiring a property manager to take care of your real estate investments. Buying shares of stock is buying a piece of a company. If the firm has 1 million shares outstanding and you purchase 10,000 shares, you own 1% of that company. Unlike managing a small business, owning part of a business through shares of stock doesn't require any effort on your part, other than researching each corporation to decide which one is a sound investment. You get your benefit from the company's results, but don't have to show up to work. Returns. Investing in real estate versus stocks. Historically, the stock market has surpassed real estate investments. According to data from RBC Global Asset Management, the S&P/TSX Total Return Index posted a rate of return of 8.0% from 1996 to 2020, while Canada's average rate of return on real estate investment was 5.7%. To put that into context, if you had invested $30,000 at the beginning of those 25 years without any leverage, you would have ended up with $2,037,735 invested in stocks based on the S&P/TSX Total Return Index, as opposed to $1,195,888 in real estate investing based on the national average. Historical data aside, the current boom taking place in the Canadian real estate market cannot be ignored. The March 2022 MLS benchmark price increased 27% year over year to $887,100. This is the largest year-over-year increase in the history of the Canadian housing market. In addition, next-generation real estate investment platforms aim for higher returns than traditional investment methods. Risk. Investing in real estate versus stocks. Real estate investments are comparatively low risk. As mentioned above, this is a fairly balanced investment, generally increasing in tandem with inflation, acting as a barrier. However, there are a few risk features investors need to be careful of, including unacceptable location, problem residents while investing in rental properties, bad construction or structural issues, and very high vacancy rates. With any investment, due diligence is very important to make sure you're making sound investment decisions. In comparison, stocks are a high-risk investment. As we explained earlier, stock prices are continuously changing. Trying to take advantage of these changes to achieve quick gains can be very risky, and often selecting beneficial investments can be difficult without a good knowledge of the fundamental business operations and financial reporting of firms. Usually, the best way to reduce this is to invest in high-quality stocks or ETFs over a longer period. Should I buy a house or invest in stocks? It's not necessary to have huge sums of available cash to begin investing in the stock market. With some individual stocks or mutual funds, you can begin to invest with as little as $100 per month. Many micro-saving apps enable you to begin investing for less than $25. However, real estate demands substantially more money in your startup investment, as well as the cost of improvements and maintenance. An increase in the popularity of real estate investment trusts, or REITs, is allowing more people to pool their money for real estate investment. The bottom line. It's totally up to you to decide, but here's a sum up. Purchasing a house requires effort and upfront costs when it comes to house hunting, screening tenants, and hiring managers. Being a property owner is itself a work in progress, as you must take care of restorations and renovations and handle tenant questions and queries. Purchasing stocks and other assets, disembodied assets unlike real estate property, requires far less effort when you harness the power of AI through technology like Q.AI. It's a one-click investment, and you can even consider real estate securities. Diversification is a lot more difficult with physical real estate properties than with the stock market in general, and a well-diversified portfolio tends to perform much better over time than one that focuses on a single sector or asset type. So friends, if you learned from our video, like, comment, share, and subscribe to our channel. See you in the next video.